Welcome back, economic warriors, to Boss Economics World, the only show that cuts through the government's economic fairy tales, exposes the real culprits behind your shrinking wallet, and calls out the policy clowns steering this Titanic straight into an iceberg of recession. I'm your host, the no-nonsense voice of financial reason, here to break down the latest economic dumpster fire with a side of satire and a hefty dose of data. Buckle up, because today, we're diving headfirst into the Trump tariff tantrum, the market meltdown, and the government's masterclass in mismanagement that's got us all one step closer to bread lines. Let's roll. Folks, if you've been anywhere near a financial news ticker, or, let's be honest, doom-scrolling X, formerly Twitter, you've seen the chaos unfold. President Donald Trump, the self-proclaimed maestro of markets, has been playing a dangerous game of economic whack-a-mole with his tariff agenda. And guess what? The markets are not having it. A sharp sell-off has rocked Wall Street, with the S&P 500 plunging 10% from its February highs, all thanks to Trump's latest tariff threats against Canada, our largest trading partner, mind you. But hey, no big deal, right? According to Trump, I don't see a recession at all. I think this country's going to boom. Oh, bless his heart. Someone get this man a crystal ball, or at least an Economics 101 textbook. Now, before we dissect this mess, let's set the stage. Over the past 3 weeks, the markets have been on a roller coaster that makes Space Mountain look like a kiddie ride. Stocks tanked after Trump doubled down on his tariff threats, only to rally slightly when he hinted at easing off his 50% steel and aluminum tariffs on Canada. But don't pop the champagne yet, the S&P still closed in the red, and investor confidence is shakier than a house of cards in a windstorm. So, what's really going on here? Is this just market volatility, as Trump casually dismisses it, or is it a neon-flashing warning sign of a government-induced economic meltdown? Spoiler alert, it's the latter. And today, we're going to peel back the layers of this economic onion, from the surface-level market jitters to the deep, systemic issues that Trump's policies are either ignoring or outright exacerbating. Grab your popcorn, because this is about to get spicy. Let's start with the obvious: tariffs are a tax. Not on some faceless foreign entity, but on you, the American consumer, and on businesses trying to keep their heads above water. Trump's latest tariff threats against Canada, our largest trading partner, accounting for $718 billion in bilateral trade in 2022, according to the U.S. Trade Representative, are a masterclass in self-inflicted wounds. Canada supplies 60% of U.S. crude oil imports and is a critical link in supply chains for everything from auto parts to lumber. Slapping tariffs on these goods doesn't rebalance trade flows, as Trump claims. It jacks up costs for American businesses, fuels inflation, and risks retaliatory tariffs that could cripple U.S. exporters. And the markets? They're screaming in protest. The S&P 500's 10% drop isn't just volatility, it's a vote of no confidence in Trump's economic playbook. Investors aren't buying his boom rhetoric when the data paints a very different picture. According to a September 2024 report from Oxford Economics, Trump's proposed tariff hikes could shave 1.2% off U.S. GDP by 2026 if fully implemented, pushing inflation up by 0.8% and costing 800,000 jobs. But hey, Trump says, markets go up, markets go down. Sure, Donnie, and apparently, so does the economy, straight into the toilet. Now, let's dig a little deeper. Trump's insistence that, I don't see a recession at all, is the economic equivalent of sticking your fingers in your ears and yelling, la la la, while the house burns down. Here's the reality: the warning signs of a recession are everywhere, and they're not subtle. First, let's talk yield curves. In August 2024, the U.S. Treasury yield curve inverted again, specifically, the spread between the 10-year and 2-year Treasury notes turned negative, historically reliable predictor of recessions. According to the Federal Reserve Bank of San Francisco, an inverted yield curve has preceded every U.S. recession since 1955, with only one false positive. But sure, Trump, nothing to see here, right? Second, consumer confidence is tanking. The Conference Board's Consumer Confidence Index dropped to 98.7 in September 2024, down from 103.3 in August, as Americans grow increasingly pessimistic about jobs, income, and the overall economy. Why? Because inflation, fueled in part by Trump's tariff threats, is eating away at purchasing power. The Consumer Price Index, CPI, rose 3.7% year-over-year in August 2024, according to the Bureau of Labor Statistics, with core inflation, excluding food and energy, stubbornly high at 4.1%. Meanwhile, real wages, adjusted for inflation, have barely budged, leaving families squeezed and businesses hesitant to invest. And let's not forget the housing market, which is basically on life support. Mortgage rates have soared to 7.2% for a 30-year fixed loan as of October 2024, per Freddie Mac, pricing out first-time buyers and stalling home sales. Existing home sales fell 8.5% year-over-year in August, according to the National Association of Realtors, and homebuilder confidence is at its lowest since the pandemic. This isn't a boom, folks, this is a bust waiting to happen. Now, let's get to the heart of the matter, the government's role in this mess. Trump's tariff agenda is just the tip of the iceberg. The real damage is being done by his administration's broader economic strategy, or lack thereof. Take, for example, the so-called Department of Government Efficiency, led by none other than billionaire Elon Musk, who's apparently moonlighting as a policy guru while his Tesla stock craters. Side note, Tesla shares are down 22% year-to-date as of October 2024, per Yahoo Finance, so maybe Musk should focus on his day job. The Department of Government Efficiency is pushing for massive cuts to federal spending and the workforce, which Trump and his allies claim will bring growth to the private sector. Sounds great, right? Except it's economic nonsense. Trump's argument, you can't have all government jobs. You have no income to pay the workers, is a strawman of epic proportions. Government jobs aren't the problem, they're a stabilizing force in the economy, especially during downturns. According to the Bureau of Labor Statistics, federal, state, and local governments employ 22.5 million people as of September 2024, or about 14% of the workforce. These jobs, teachers, nurses, infrastructure workers, aren't just make work, they provide essential services and inject demand into the economy. Slashing these jobs, as Musk and Trump propose, would crater consumer spending, which accounts for 68% of U.S. GDP, per the World Bank. A 2024 study by the Economic Policy Institute estimates that cutting 1 million public sector jobs would reduce GDP by $150 billion and trigger a multiplier effect that could cost an additional 500,000 private sector jobs. But hey, who needs data when you've got vibes? Trump's vision of a real economy, not a fake economy, is starting to look like a dystopian hellscape where the government does nothing, businesses drown in tariffs, and workers are left to fend for themselves. Oh, and let's not forget the clown show that was Trump's photo op with Elon Musk, where he proudly purchased a Tesla to boost an ally. Folks, this isn't leadership, it's a circus. While Trump was busy playing car salesman, the real economy was burning. And the irony? Tesla's stock plunge isn't just a Musk problem, it's a symptom of broader market fears about Trump's policies. Investors are dumping growth stocks like Tesla because they see the writing on the wall, higher tariffs, higher inflation, and lower consumer demand spell trouble for companies reliant on innovation and discretionary spending. But hey, at least Trump got his soundbite, right? Some people are going to make great deals by buying stocks and bonds, he says, as if the average American has the cash, or the stomach, to gamble on a market teetering on the edge of collapse. Newsflash, Donnie, the median U.S. household has just $8,000 in savings, according to a 2024 Federal Reserve survey, and 60% of Americans live paycheck to paycheck. They're not making great deals, they're trying to pay rent. So, where does this leave us? On the brink of a government-induced recession, that's where. Trump's tariff threats, combined with his administration's obsession with slashing government spending, are a toxic cocktail of bad policy and worse outcomes. The data is clear. Tariffs will fuel inflation, kill jobs, and disrupt global supply chains. Austerity will choke consumer demand, gut public services, and destabilize local economies. And the markets? They're already pricing in the chaos, with volatility indices like the VIX spiking 25% in the past month, per CBOE data. But here's the kicker, Trump doesn't care. He's too busy playing the blame game, downplaying market signals, and cozying up to billionaires like Musk, who seem more interested in personal enrichment than public good. This isn't leadership, it's negligence. And the cost? It's going to be borne by you, the ordinary American, who's already struggling to keep up with rising prices, stagnant wages, and a housing market that's out of reach. Folks, it's time to wake up. The government's mismanagement isn't just a talking point, it's a 5-alarm fire. We need policies that stabilize the economy, not destabilize it. We need investments in infrastructure, education, and healthcare, not reckless cuts that gut the public sector. And we need leaders who understand that tariffs aren't a magic wand, they're a sledgehammer that smashes supply chains, jacks up prices, and kills jobs. So, to my fellow economic warriors out there, whether you're a concerned citizen,